Well, good afternoon. I'm Alan Sykes, and with me today is Scott Sykes. He and I both are with Sykes and Company, PA. We're a CPA and advisory firm working exclusively with pharmacies all over the country. And today, it's our pleasure to have Mike Bollinger with us, who is the general manager of pharmacy lending at Live Oak Bank. Mike is a friend of us all, and you probably have seen Mike speaking at various conferences in the past. Hopefully, one day that will start back in the future. But it's our pleasure to have Mike with us today. He is an expert in this particular area, and certainly he's very active. Even today, he was just telling us that just transitions are going crazy in this marketplace here. So, Mike, we look forward to you being with us today and informing us as to what some of these changes are as of recent tax law changes.
Yeah, thank you for having me.
Well, let's get right into it. Of course, we're going to, this webinar obviously is informational only for your educational purposes. Speak with your advisors, bankers, etc. For your unique situation. We are not your advisors, so you need to speak with your own. Mike, you want to take it away?
Sure thing. Thank you, guys. So I don't know if anybody on this one has attended the financing during the pandemic part 1 that we did back in I think August of last year, which seems about like 8 years ago at this point. But one of the things, as the bank that really focuses on pharmacies, we get a lot of questions every day about what some of the needs are and what's out there. So the cash on hand is obviously one of the biggest things that we have heard a lot of, and it's actually been a really neat thing. And Sykes could probably echo this, but there's been a unique way to put cash on the balance sheet in the last year or so. I guess the last year, with regards to some of the subsidies and the programs that the government has had, and the fact that pharmacies have been deemed essential has really made a positive impact. To where other industries such as restaurants, bowling alleys, whatever it may be, have been shut down. So that did force a change in business model. We have constantly heard there are people that have closed their lobbies and have since maybe opened them up, and maybe now have even went back to closing their lobbies again, doing drive-through only, doing more delivery. All of those things have come at a price, or maybe some give and take with efficiencies, whatever it may be. But that change in business model was a blessing in the fact that you could actually change up some things in the pharmacies and actually create some new programs. A lot of people implemented MedSync and some other things to help them even post-pandemic. So it's really been neat to see. But the biggest things that we have seen is the help of the government assistance programs, and you can see March 27th of 2020 is when the CARES Act, the original stimulus, I should say, went through from the government. And then here recently in December, the Economic Aid Act was passed and is now officially official. So that's some good news for us. So what we'll focus on today is I'll give you a look back at some of the things that the CARES Act had. Some of those are still in play. Some of those have changed a little bit, and some of those have been 1A, 1B, and then we'll focus a lot more on Economic Aid Act. So we'll go to the next slide here. So looking back, the CARES Act was really meant for the initial wave of COVID and the initial wave of shutdowns and just business as usual, just kind of coming to a screeching halt across America. What the government looked at was, how do we get capital into the hands of businesses that need it, and how do we get it to them quickly? So the one that on this screen that probably everybody knows about is the Paycheck Protection Program. Round 1 did occur last year. That's when you were able to get 2.5 times your average monthly payroll in the form of a forgivable, eligible for forgiveness type of a loan. It was pretty successful for most of the businesses that have taken it. So that's one that has been pretty neat. The cool part of that is a lot of people have already seen that their forgiveness already take hold, and people are actually getting those loans forgiven, which is what it was meant for. And it was highly predicated on the fact that people could keep their employees employed at their business. Part of that forgiveness was a 60% employer employment rate percentage. So that was a pretty cool thing. We'll talk about round 2, which is part of the Economic Aid Act here in a moment. But again, SBA Express program, they did increase that to $1 million from $350. That is still in place. So if you need an express loan, you can actually apply for that still today. And the other thing about that is that can actually be a line of credit if that's what you need. And then also USDA loans, which they also had changed some of the components of that as well. That's really for your rural businesses, but that's another way that businesses could get funds, and they did tweak the amounts on that last year. And then the Main Street Lending Program, which for our customers here, nobody's really been applicable for that program. So that's kind of a look back on what has been, and so now we'll look forward to where we are with the Economic Aid Act. So again, on December 27th, 2020, the government put together the Economic Aid Act, which really did a couple things. One is it looked at what businesses were impacted throughout COVID, which ones were hit harder than others, and then also how do we look forward and help people go through the process going forward. So there's 2 main components of this. One is, I mentioned PPP Round 1 last year. Now they have what's called a second draw of PPP. So if you did secure a PPP loan last year, you are eligible to potentially get what they call the second draw of PPP. The parameters are just about the same, with the exception of one piece of it, which is you have to show a 25% reduction in revenue year over year. So that's something that is a little different than from the first round. But again, it can be forgiven, and you can actually show 2 methods of revenue decline. You can either show either a specific quarter of 2020 and then show that over the same specific quarter for 2019, and that could be Q1, 2, 3, or 4, or you can do the full year of 2020 and look at the full year of 2019. But in either case, you really need to show that 25% decline in revenue. For pharmacies specifically, when we're getting, because we are processing PPP loans as we speak, we're asking anybody that comes in, did you experience that? And the anecdotal answer so far has typically been no, which is a good thing in theory. But that is something that there have been some pharmacies that have been eligible, and then a lot of others have not. So I don't know, Scotty and Alan, if you're seeing that as well.
Mike, we haven't seen one yet. We have looked closely at several that were reasonably close, but we haven't had, fortunately, pharmacies that have had that kind of decrease in revenue, which I guess that's the good news. And while we're talking just a moment, please feel free to put in your questions in the question box. We'll try to answer those as we go along and be conversationalists as we talk about this. But like you say, anecdotally, we just not seeing people qualify for that.
We actually did have one. We did have one, and that was a niche pharmacy type situation. So, and some of the things were really outside our control. So, but I've had one.
Yeah, I know there's a fertility pharmacy that we talked to, and he had lost about 70% of his business just because of that business model. But that's highly niche business model. I think you're right, Scotty. If it is a specific type of business model, then there might have been a little bit more exposure to that. Your traditional pharmacy, however, has not really, from what we can see.
And you think about it, this really was not designed for pharmacies, the essential business out there. So
it's really designed for restaurants more than anything else. And Ben actually has come up with a good question. He's got a sideline soda fountain, and wants to know, Mike, about what about pharmacies with soda fountain? How would you would you see that you have to class code the pharmacy on one side and soda fountain on the other and have the historical information for that? Or how would you view that?
Yeah, it's a good question. So if it's one entity and all the numbers roll up, it doesn't matter if you're a pharmacy or a soda fountain, or if you've represented or if you have not represented, if you have experienced the 25% decline in revenue, and you can show that on your financials, then you're eligible for round two.
But that's going to be for the entity itself, correct?
That's correct. Yep.
Yeah.
That's correct.
I got
and
a
the
question.
other thing too
Go ahead.
is this would the 25% applies for round two, assuming that you had a PPP loan last year. There is still availability now. They've opened it up. If you did not get a PPP loan last year, then you can actually apply for what would essentially be round one, which is just to get a first round PPP loan regardless. So it would depend on if he had a PPP loan or not.
And what about a situation where there may be 6 or 7 pharmacies 100% owned by the same person, or several pharmacies owned by the same person, and maybe one of the pharmacies, a niche type situation, had that drop in revenue? Each are unique entities, but 100% owned. Do those affiliation rules, this is getting a little technical on you, Mike, do those affiliation rules kick in? I'm throwing you a curveball here.
So it depends on the entity structure. So the way it worked last year, and I would imagine it is, and I could get some clarification on this if you'd like, it was by entity last year. So unless they rolled up into one, entity for all the businesses, then they should qualify on their own, is the way I understand it.
Okay.
If you had 6, we actually are in the process of doing a seller who had seven pharmacies, and to do the acquisition, the PPP loan either needed to be forgiven or it had to be at least applied for forgiveness. And he's only selling 2 of the 7. We needed him to apply for forgiveness on all 7 stores because it was just one single entity that held all 7 locations.
Yeah.
Had he had 7 entities for the 7 different stores, we wouldn't have had to worry about that. He would have just applied for the 2 stores that he's selling, and then the others could have just went the normal course.
But to really get technical, if you had seven single member LLCs that all folded up into one S corp, that's only one entity, correct?
That would be my understanding.
Yep.
Yeah, we're getting. Yeah, it's pretty technical, and
Yeah.
I can get confirmations on that if you'd like, but that's my understanding is how it was last year.
Because I was reading into that, and I saw affiliated rules in there, and then, but we won't get into that. Moving right along here, Mike.
Yeah, so the really neat part about the Economic Aid Act is what they did for existing SBA customers who had a loan already, and then potential new SBA loans. And so this could kind of get a little crazy, but I'll try to explain it in very slow terms. If you had an existing SBA loan prior to March 27th of last year, then the government gave you 6 months of payments starting April through September. They paid your payments. And so then they said last year, any new loans that were funded between April and September of 2020, the first 6 months of payments were covered by the government. The full amount P&I was paid for. So if we expand on that now, then you had a window between September 27th of 2020 and January 31st, where people were getting SBA loans. There's no subsidy for those folks whatsoever. They don't get any benefit on their 6 months of payments. And then they don't get anything, forward thinking as well. But what the Economic Aid Act has done is it has taken into account some of the hardest hit businesses, like your restaurants, your entertainment centers, whatever they may be, and they will give them back. If you already had a loan, then they're giving you extra incentives or extra payments, and pharmacies are eligible for that for past loans. But starting February 1st, and I think if you go one more slide, Alan, I think this might be on the slide itself. Yeah, here we go. So starting February 1st until September 30th of this year, so starting on Monday, if you get an SBA authorization number with the caveat, and it says it on here, subject to availability of funds. As long as there's funding available through the Economic Aid Act to support this specific subsidy, they will do three things for any new SBA loan. And this is pretty cool. One is the bank, we get a 90% guarantee, which means that we are highly incentivized to fund the loan because our exposure is only 10%. Historically, that's been 75%, meaning our exposure is 25. So now we're at a 90-10. So that gives us the motivation to fund loans, and that's what the intent is there. Secondly, and this is the benefit to the borrower themselves, the SBA guarantee fee, which every SBA loan should pay. It's a percentage, it's a sliding scale depending on the loan amount. So the larger the loan amount, the larger the percentage you pay. But think about it like an origination fee. The SBA guarantee fee is what covers that guarantee to the bank should there be a default. So it's a self-funding program through the government. They will waive that guarantee fee, which is about an average of 3% of your loan. And so what it's doing is that waived fee, which would have been baked into the loan and paid over the life of 10 years or whatever, that now is just coming off the top and it's lowering the loan amount, which is ultimately lowering what your payments would be because your loan's lower. So that's one benefit. The second benefit is for the first 6 months of your loan after it's fully funded, which like an acquisition would be fully funded at closing. Your first 6 months up to $9,000 are paid for by the government. So that could be a $54,000 benefit. So between those two things, if you did like $1 million loan, you're talking about an $85,000 benefit to securing an SBA loan as long as you do it in this window. And so what's really cool about that is we, as Alan and Scotty and I were talking before we jumped on, what we do the most of here at Live Oak is business acquisitions of one owner to another. About 85% of our portfolio of new loans is going to be that acquisition type loan. We are busy. And one of the reasons that we're busy right now is because of this subsidy. And so if you're in the market for funding, or if you're thinking about expanding into a new, purchase another pharmacy, maybe it's a second, third, fourth, fifth, whatever it is, or you're looking to buy your first one, now is a really good time to secure an SBA loan. And historically, SBA loans are really good for pharmacies because they have a lower down payment, they term out longer, and there's no balloons or covenants. And then also they're cash flow based, not collateral based, meaning you don't need that piece of real estate or tangible hard asset to make the decision. So being that pharmacies have historically been funded through SBA loans, and if you're in the market to acquire a pharmacy, or maybe you own the pharmacy and you could buy the real estate, we're actually doing a lot of real estate transactions right now as well for folks that have just been leasing all these years. It's a really, really neat time. But again, the caveat is while funds are available, and who knows if they'll extend it. We don't know how long it'll take to run out of cash. We do believe it will at some point. It's just a matter of, how quick that takes.
So Mike, does that cover, Kevin wants to know, does that cover the express loans as well?
This is for 7A. That's a good question. This is for 7A and USDA loans.
All right, but not the express loans.
That's correct.
Okay. And does this include a refinance for an existing SBA loan? And I guess you just answered it. If it's a 7A, it would.
Well, that's a really tricky question. One is right now, if you have an SBA 7A loan starting February, you're going to get 3 more months if you already have the existing loan and it was funded before March 27th of last year. You're going to get 3 months of $9,000 payments regardless. That's just part of the Economic Aid Act. The second part of that is you generally can't refinance. It's not impossible. It's just very hard to refinance an SBA loan with an SBA loan because eligibility for an SBA refinance, you have to meet quote unquote unreasonable terms. And an SBA loan should be on the most reasonable terms to start. So it's kind of hard to meet the eligibility. But if you do have a non-SBA loan, if you have a conventional, commercial, whatever you want to call it, type of a loan, and you want to refinance it into an SBA, you can do that, and it would be eligible for these subsidies.
So what happens if you're selling and transferring the entity and the loan servicer is not able to take forgiveness applications yet? Would there be any cause for concern that you would lose forgiveness eligibility?
Well, are you referring to PPP?
That
Yes.
sounds like PPP, yeah.
Yeah, so the PPP side of things, when we do an acquisition, and this has been a work in progress, but this started October 1st of last year. When we do an acquisition and there's an existing PPP loan on the books, there's two things that need to be done. One is the seller must apply for forgiveness with the lending institution that made the PPP loan. And secondly, well, first off, if it's forgiven, it's fine. Like, let's just put that out there. If it's forgiven, you're all good. Nothing. This is for the ones that aren't forgiven. So you have to at least apply for forgiveness. And then the second thing is the bank that held your PPP loan would need to fund an escrow account. Well, you would need to fund an escrow account that's held by that lending institution in an interest-bearing account for the amount of the PPP loan. And you could use the proceeds of the sale to fund that account. And then once the forgiveness is determined, whether it was all or part or none, at that point, those funds would get released to pay the loan or would go to the seller if it was 100% forgiven.
So Corey wants to know, does this apply to file acquisitions as well? And I guess the answer is, if it's a 7A loan, it would.
Yes.
Is that right?
Yep.
Okay.
Yep. Yeah, you can do straight acquisition, real estate acquisition, mainly refinance of a non-SBA loan. File buys are definitely included. Expansions, if a lot of people don't realize that there's an expansion rule with SBA as well. So if you currently own an existing pharmacy and you go buy another pharmacy, which would be a like-minded business, we can actually leverage the current pharmacy that you're in to reduce the down payment from 10% to whatever we need it to be, just based on cash flow. So we could significantly decrease your amount of down payment. And if you could do that and it cash flows and then you get the subsidy, I mean, it's kind of a win-win across the board. So we've been doing a lot more expansions here lately. And as you all know, that multi-store ownership in pharmacy is becoming more and more prevalent than ever before. And we have definitely evolved with the market. And so we're doing a lot more multi-store owners as well. So we have a good process in place for that. But using the SBA expansion as a way to do that has been a really good way for these folks to get into ownership of a second or third, maybe fifth store.
So you're getting the 6 months of P&I at $9,000. They're waiving the SBA fee. So you add all that up, not to mention the interest you're saving on that SBA fee over 10 years. You're saving a lot of money here. It's a pretty big deal.
Yep. And the 9,000 that goes towards your principal and interest as if you're the one making the payment. So it's not like a deferral. It's not forbearance. It's as if you're making the payment. So if your payment is 8,000, they make the full 8,000, and that's no different than you making the payment. If you're like, we talked to a lady yesterday, her monthly payment on an acquisition of real estate and pharmacy, it's going to be $9,800 a month. Well, her payment for the first 6 months is only going to be $800, and the SBA is going to pay the other $9,000. That's just all towards principal and interest. And your highest interest is month one.
Tax free.
I'll let you.
Tax free.
I'll let you say that part.
Tax free, and you get to deduct the interest. Pretty good deal. All right.
Good questions, though.
We got another question.
Yeah,
what about business improvements with SBA Refi?
Yeah, anything like that. If you can get a SBA 7A loan, whether it's for working cap or some credit improvements or improvements in your business or whatever, renovations, whatever you want to be. The only trick to it is it has to be fully funded before you get the $9,000 payment. So if you're going to do a construction project and it won't be completed until, whenever, if you would be banking on the funds still being available at the time that project is complete before you'd get the 9,000. So if you're going to do a startup or something to that effect, it would not be the most advantageous. I mean, you could try it, but it's chances are the money may run out, but prior to you completing your project. So it has to be a fully funding loan.
All right.
And just kind of moving forward, the demand for credit is definitely out there. For us specifically, I can tell you we do pharmacies. My team focuses solely on pharmacies every day. We are busy, really busy with acquisitions right now. We're doing a lot of real estate transactions of people that have leased their businesses. We've actually had some deals where a seller was actually going to hold the 100% financing for an acquisition. And then because of the subsidy, they said, you know what, it doesn't make sense to do that. Let me go use an SBA loan to get the subsidy. So there's a lot of different strategies that people are putting out there right now, but the demand for credit will continue, especially in our space. We have seen a lot of pharmacies where they had the dip in revenue last year, which was really like a blip on radar, but it seems to have come back for most people, and we're seeing really good pharmacies. We still see some that are struggling, but the demand for credit is definitely out there, especially in the pharmacy space. And what you're going to also see is that banks, as they navigate through this time, their credit box will eventually change, and it may change for the good or for the worse. I'll tell you, with the way we are, we're bullish on new loans, especially if we get a 90% guarantee and we can see a good performing business with a good borrower that's coming in. We're going to do those, and we're going to do them quick. So we've actually tightened up our closing process as well. So we're actually getting these things in and out the door a lot quicker than we had in the past. And one of those reasons is to secure that SBA authorization number so that we can get you allocated to these funds with the subsidy.
Good stuff.
Yeah, so I think we've kind of talked about all this already, but just, COVID continues to be impacting everyone. I think more and more states are, like North Carolina, where we are, I think they said at least one more month of stay at home, whatever it is, meaning different restrictions on different businesses. PPP Round 1 and 2. Round 1's in the books for the most part. Round 2 is actively being done as we speak. We opened up last week on that, and we were processing thousands of applications for that. And just keeping as much cash on your balance sheet right now as possible, just so you can weather it, just in case there's something unforeseen down the road, which is that liquidity component. But other than that, that's kind of what I wanted to go through, is mainly that economic aid act that has really proven to be some really cool things.
Mike, how can people reach you?
Yep. So Live Oak Bank. You want my email address?
Sure.
It's mike.bollinger@liveoak.bank.
All right.
And I give you my cell too. It's 504-453-9726.
Why don't you repeat that one more time?
Yep. The email is mike.bollinger@liveoak.bank. And the cell phone is 504-453-9726.
All right, we've got some additional time here for some questions, so please put them out here if you have additional questions on any of the PPP processes, the forgiveness process, whatever. And Scotty, while we're queuing up waiting for the questions, why don't you talk about the RX assessment that Sykes and Company can do?
Yeah. Well, we got a question here. Can you deduct the interest on the payments the SBA made on your loan? You can. You can deduct that interest, and the principals, that payment they're making is tax free. So that was part of the December 27th bill as well.
And another question says, has Live Oak updated the PPP Round 1 application? It is different now from the original easy application that was back in October, and that's a question
for forgiveness.
Yeah. Did we update the application?
I guess with the revised the $150,000 and less, you know, where you just pretty much sign the form. I guess that's what he's referring to. Yes.
Yeah, we've updated everything to the latest. Everything should be updated, and everything is as current as we can be with PPP.
Yeah, just to let everybody know, if you have $150,000 under, the SBA has released and a very easy forgiveness form that is essentially a couple of boxes to check and a signature, and that's about it for 150 and under. So I know that's on the SBA.gov site. I think, Mike, you're saying it's probably on your website too if you got a PPP loan through you guys originally. Bill has got a question. Is there need funding on the grant portion of the EIDL program? Is there need funding on the grant portion of the EIDL program? Is there new? I'm sorry. Is there new funding? Yeah, Bill, there is new funding on the EIDL. Again, it should be updated now on the SBA.gov. If it's not, it will be pretty soon. But they have added additional funds back on the EIDL. You have to be careful with the EIDL funding, which is different than the EIDL grant that many of you got last year for $10,000 or $1,000 employed. That has a 30-year term. They typically take a blanket lien on your assets, 3.75% interest. However, there are lots of terms and conditions that you need to understand before you sign your life away on that EIDL loan. So if you got an EIDL loan for 150, you need to probably go back and review that and make sure you understand your requirements, both on an annual basis and an ongoing forward basis. So I know we got one here and I didn't like it and I paid it back. Oh, okay? Bill says he checked today and it shows no funds available. To me, Bill, that tells me they have not yet updated that yet, because I know I listened to a webinar within the last 2 weeks and they were talking about it being any day now. So apparently they've not yet updated that information on SBA.gov.
And I believe those EIDL grants are going to be targeted to certain industries. So I'm not sure pharmacy will be in there. But I could be wrong on that, but I believe they were saying that was going to be targeted.
Yeah.
And the grant, if you did get the grant last year, that also is non-taxable, and you don't have to pay that back.
And another, we actually just talked to a lady this morning. They took an EIDL loan last year, and they're having some questions about the change of ownership language in that loan. So if you did get that and you're thinking about selling, or if you're buying a store and it has an EIDL, you need to work through those components as well.
Yeah, you sure do. Scotty, again, while we're waiting for any further question queues, talk about the RX assessment that Sykes and Company can provide to the pharmacies online.
Yeah, we do an RX assessment service here at Sykes and Company. So if you are wondering about what your current accounting and tax situation is, or you may feel like something's not quite right, or you may have some questions, you're not very confident in maybe your advisors, what we do is we take your accounting file and tax returns for the prior 2-3 years, business and personal. We overview that internally, and then we line up a video call with you and go over the balance sheet, the P&L, what's actually going on in the file itself, how you're doing the accounting. We'll also go over the tax returns with you and let you know things we see good, bad, and indifferent, or things you're doing really well with. And I can tell you just about most times we're finding a lot of things that is of extreme value to a lot of pharmacies out there. And then at that point in time, you'll have a roadmap of the things you need to work on, or issues and concerns you need to address. So really good service there for pharmacies out there that are wondering where they stand.
Now, we do charge $1,495 for that service, but you will come away with actionable items that could change the focus of what you're doing in your pharmacy, or how you're doing your accounting, and how you're handling your tax. For example, if you're accrual now, you may want to go to cash. I was talking to a gentleman this morning, and we were able to essentially show him we could save $250,000 by just making that change this year. He had no idea that he had that possibility. So the Tax Cut and Jobs Act was signed into law in December of 17, allows pharmacies that have average sales under 26 million, which is most of you guys out there, to be able to switch from accrual to cash for tax purposes. And by doing that, you can potentially save and have control of your destiny a heck of a lot easier and better than you can when you're on an accrual basis. So that's just an example of something that we take a look at to see if it makes sense for you. Now, even if we do that, we continue the accounting on accrual basis month in and month out, because we think that's the only way you can determine appropriately whether you're making money or not in a pharmacy, which includes adjusting third-party receivables, inventory, payables, and cash, etc. But this is a great service that we've got a lot of people that have taken advantage of this over the last few years that we've been doing this. So just want to let everybody know that we have that available.
Yep.
You can just click on that link or go directly to our website in the upper left-hand corner, the main web page. We have a video there that discusses this in some more detail.
And I always go in there and try and find the tax items that's going to get you your money back plus some.
Yes.
And the other day we had one, and we found about $90,000 of tax that they overpaid because they weren't taking the qualified business income deduction, believe it or not.
Yep.
So you will get some good information out of here. Also, anytime you can always email us at sykes@sykes-cpa.com. And I don't see any more questions in the box here.
Yeah, and as you say, anytime you have questions, just ask Sykes at sykes-cpa.com. If it's something about lending, we can forward that on to Mike if you can't remember his email address. Here are our direct numbers, email, Twitter. You can also subscribe to our YouTube channel. Again, one more last time for questions. If you have any, don't hesitate to put them out here. Thank you very much, Brock, for your comments, your positive comments. It's our pleasure to do them. It's our pleasure to have had Mike with us, and it's our pleasure to work with Mike on an ongoing, consistent basis. The guys at Live Oak, he and Greco, know a tremendous amount about the SBA process and pharmacy lending, and I highly recommend it if you have a need for transition, a purchase, improvements, real estate like he's talking about. I mean, what a wonderful time to consider that this year, where A, rates are reasonable, and B, these terms and conditions probably are not going to get any better in our lifetime. So take advantage of that. Remember, post February 1st, until that funding is run out, you don't have to pay the roughly 2.5–3% fee to the SBA, and those payments are made for you for the period of time he was talking about. So keep that in mind as you go forward. So Mike, any last words you want to throw on the table here?
No, I couldn't have said it better myself. This is an unprecedented time, so take advantage if you're in that position. And certainly do appreciate you being here today. And thanks to the Sykes crew for letting me participate.
It's our pleasure, and we appreciate everybody being on the call today. Thanks very much.
Appreciate
Thanks,
it.
Mike. Have a good day.
Thank you.
Bye-bye.